Let's be real. We all know that real estate can be a fantastic way to build wealth. But who has an extra 100 grand just lying around for a down payment, right? Well, today we're going to pull back the curtain on a super powerful tool that lets you invest in huge properties with just a few clicks. We're talking about the REIT.
Okay, so here's our game plan. First, we'll talk about the big hurdles that keep most people out of real estate. Then, we'll introduce the REIT as the solution and peek inside to see how it works. After that, we'll cover how you can actually get started. And finally, we'll weigh the all-important risks versus rewards. All right, first things first. Let's talk about that giant wall that stops most of us from ever buying an investment property.
I mean, for generations, owning property has been this cornerstone of building wealth, right? The whole idea of collecting rent checks, it's like the textbook definition of a smart passive investment. It's a really powerful dream. But then reality crashes the party. The barrier to entry is just massive. We are talking tens, sometimes hundreds of thousands of dollars just for the down payment. And that's before you even think about the headaches of finding tenants, fixing things, all of it. For most of us, that dream stays exactly that, a dream.
But what if you could just bypass all of that? What if you could own a piece of high-quality properties with just a couple of clicks? Well, that's exactly where our solution comes into play. And here it is, the hero of our story, the REIT, which stands for Real Estate Investment Trust. The absolute easiest way to think about it is like a mutual fund, but for real estate. So instead of buying a basket of different stocks, you're buying a tiny piece of many, many different properties. This quote just nails it. This is the core idea. You get to be a part owner of massive buildings and earn income from them, but you never, ever have to screen a tenant or fix a leaky toilet at 2 a.m. There's a whole professional team that handles all of that for you. Now this is the secret sauce. This is the magic. By law, and that's the key part, they are required to pass along at least 90% of their taxable income directly to shareholders. They have to. This rule is what makes them such powerful and consistent income generators. So when you put it all together, the benefits are just crystal clear. You get that income stream, you're instantly diversified, you can buy and sell them as easily as a stock, and you get access to a quality of real estate you could probably never afford on your own. Okay, so we get what a REIT is and why it's so appealing. Now, let's pop the hood and see how this machine actually runs. Generally, REITs come in two main flavors. You've got equity REITs, which is what most of us think of. They actually own the buildings and collect rent. Think of it as being the landlord. Then you have mortgage REITs. Now, these are different. They don't own the properties. They own the loans on the properties. They make money from the interest, so it's kind of like being the bank. It's a really important distinction. And if we look closer at those equity REITs, the variety is just incredible. Your one investment could give you a piece of apartment complexes, shiny downtown office towers, hospitals, the data centers that literally power the internet, hotels, and yeah, even shopping malls. It's like owning a cross-section of the entire economy. So at this point, you might be thinking, okay, this sounds pretty interesting. How do I actually do it? Great question. Let's break down the main ways you can get started. You've got three main paths you can take. You can play stock picker and buy shares in individual REIT companies yourself, or for a much simpler approach, you can buy a REIT ETF, which is one single investment that holds hundreds of different REITs. And then there's the new kid on the block, real estate crowdfunding. Honestly, for most people, especially if you're just dipping your toes in the water, REIT ETFs are a fantastic way to go. And why is that? Because you're not putting all your eggs in one basket. You're not betting on a single company or type of property. You're spreading your risk across the entire real estate sector with just one purchase. And it really is that easy. Here are just a few of the biggest and most popular REIT ETFs out there. You can see their ticker symbols and what they've been paying out in dividends recently. You can buy any of these through a normal brokerage account just like you would any other stock. That crowdfunding world offers another really interesting path. You've got platforms like Fundrise that are basically built for beginners, letting you get started with as little as $10. And then on the complete other end of the spectrum, you have platforms like Yield Street, which are for high net worth, experienced investors and have much, much higher minimums. Okay, now let's get serious. Like any investment, it's not all sunshine and rainbows. It is absolutely critical that you understand the potential risks and weigh them against the rewards. First, let's talk performance. I mean, how have they actually done? Well, if you look at the last 20 years, equity REITs have returned about 8.2% per year on average. That's right in line with the broader stock market's 8.5%. So what that tells us is that they've been a really competitive long-term investment.
But, and this is a big but, you have to remember that REITs are still stocks. That means their prices can go up and down. They're also pretty sensitive to interest rates. When rates go up, it costs them more to borrow money. And one last thing to keep in mind, those nice dividends are usually taxed as regular income, which can mean a higher tax bill than you'd pay on dividends from, say, a company like Apple. And please, please listen to this piece of advice from expert Harm Meyer. Do not just chase the highest dividend yield you can find. An unusually high yield is often a giant red flag from the market that there's some serious risk with that company. It is definitely not a free lunch. So if you are thinking about buying an individual REIT, how can you do a little homework? Here's a simple 3-step checkup. First, go online and actually look at their properties. Second, check their debt levels in their financial reports. You're looking for a key ratio that shows how much debt they have compared to their earnings. Lower is always better. And third, check out the management team. Are they experienced? Do they own their own company's stock? You know, when you step back and look at the big picture, what REITs have done is pretty incredible. They have truly democratized real estate investing. What was once this exclusive club for the ultra-wealthy is now an asset class that basically anyone can add to their portfolio, sometimes with less than $100. So what's the bottom line here? It's this. You now have a powerful, easy, and accessible tool to invest in real estate. The only question left is the one you have to ask yourself. Is it the right key to help unlock your financial goals?